Good morning, everybody. Happy Monday. Welcome back. Daily profit plan. Let's get started. Let's go screen share and let's get cracking on some highs and lows. I was doing some work over the weekend and I will share this in a little bit. Let me get things running. So this income grid that I'm talking about, I'm going back and manually testing this thing for the last 3, 4, 5 years. We've seen a lot since COVID, and I know that if we can survive a COVID type move, we can survive a 9, 10 month bear market in 2022. We can survive some 5 to 10% corrections like we saw in 2024. This year, 2025, through Liberation Day peak to trough. This little correction we've seen these last couple of weeks, October 10th sell off and November 20th sell off. Hopefully, I don't have to keep saying that and rattling off all these big candle, big corrections, one type outlier type moves. But that's exactly what we've been seeing. So. Anywho, I'll talk more about that a little bit. Chat's open for everybody. And we are looking at volatility is trading around 22.6 this morning. Peaks last week around 28.27. Currently 22.68. Futures is pointed to the upside, 0.56 in futures. NASDAQ futures 0.85, Dow futures 0.24, Russell futures up about 0.29, VIX has retreated a little bit. Dollar is flat, 0.1%. Oil's up a smidge, gold up 0.3, silver up 0.2, Bitcoin bouncing off of a pretty decent recovery for the weekend. I think we had lows in the 82s, I think. 80,700 was the low, and that was actually from Friday's trading. So Friday's low, 80,000, came back up. Stability is a big component. I mean, I'm certainly not saying this is the bottom for Bitcoin. But if we stabilize in here, that's encouraging. But I wouldn't want to see too much time spent. If I'm correct with this technical outlook with this channel, if we spend too much time on the right-hand side of this channel or below this channel, that's not a good look. So anyway, we'll see. It was a pretty sharp decline. We'll see if we can get a recovery. Fed rate tool, or the Fed watch tool, that was probably the biggest change from last week. Now the probability is almost 80% that they're going to cut rates in December. So what a difference a nasty day makes in the market. Big pivot, and all of a sudden the Fed speakers went right in line and said, yeah, we should probably cut rates. We could probably cut rates. So hopefully they do, and that kind of satisfies what the markets have priced in, maybe help things stabilize a little bit. We are coming into a holiday week, so it'll be pretty interesting to see where price action takes us into Wednesday. I think so. Markets are closed on Thursday. Limited trading hours on Friday. So we'll get our levels in. I will be running sessions Monday, Tuesday, Wednesday, and Friday. I'm also hosting a free session this week. We've done this before for some of these little segments during the daily profit plan, but I'm going to do a session like this called either trading strategy breakdown or anatomy of a trade, and we're just going to have a special afternoon session. I'm going to do it, I think, on Tuesday and Wednesday this week. I've got it slotted for 1:30 p.m. Eastern time. So 1:30 p.m. Eastern time Tuesday, and 1:30 p.m. Wednesday. All traders are welcome. So if anybody wants to talk, any specific type of strategy, you want to talk about a credit spread, you want to talk about a debit spread, you want to talk about a butterfly spread, you want to talk about a ratio spread, you want to talk about a iron condor, you want to talk about a strangle, you want to talk about a straddle, all these silly options in. You want to talk about a jade lizard, I don't care. We can walk through that stuff. Obviously, if you come and ask me, 20 different strategies, we're not really going to be able to deconstruct all of them. So, if we talk about a couple strategies, let's break them down. Let's make sure we understand. We can throw it, trade in. The one thing I will do is whatever example and strategy we discuss, we'll keep it on the same asset. So more importantly to you as the trader is, what do you want to do in the market? So if you come to me and say, Chris, I want to be bullish in the S&P, let's talk about strategies to get that done. I want to be, directionally neutral right now because I think the market's not going to go anywhere. Let's talk about strategies that can take advantage of that. Okay. All right. So that's little bonus classes for me on Tuesday, Wednesday this week. 1:30 p.m. All traders are welcome. I'll talk about that again at the end of the session today. Jade Lizard. All right. I mean, funny name. It's a naked put and a bear call spread. That's the combination. So what it is you're willing to own shares if things go lower. You want to make sure you take enough credit that even on the upside, you're not going to lose. So it's really careful how you position that. But again, let's save that for the anatomy of the trade. Okay, good stuff. All right. VIX at 22.59. We'll keep an eye on this morning. VIX looks like it's retreating a little bit, but I'm just going to do the rough numbers right now. 22.55, 22.54. So today is the 24th. Okay, so 22.54 VIX. So 1.41. We are going to have another gap today. Last week, I don't think I got a screenshot in for my daily profit play. We closed just above the 50-day last week. All right, let's get back into the tracker. Okay, and ATR tracker. 21st closing price 66.02. After Thursday's outlier type day, Friday did a pretty decent job recovering, but open to close was still within the expected move for the day. Okay. So I will get rid of this. I'm going to recenter this at 66.0298. Okay, that's the close from Friday. VIX around 22.4. It's dropped about point 0.10. I'm still going to calculate on the 22.5. That's 1.41%. Be a little bit safe. Now we should have a gap to the upside. I mean, futures up 0.71. Again, these gaps are, again, they're totally fine. It's just, it does make things a little bit dicier when it comes to, okay, are we gapping and still respecting the, opening bell to closing bell price from previous day's close to close today? Is this a whole new, day with intraday movement and market makers expecting, plus or minus whatever, plus or minus on the day is probably pretty high. VIX is still over 20. I mean, this isn't just like, oh yeah, 25 VIX down to 22. It's like, that's still a lot. There's a lot of potential movement that we could be dealing with every single day. All right, it's going to bring up the broker platform. So if we gap up, let's see what the SPY is at right now. Market finish red on the week, opening up positive today. What do we have to do to reclaim? I mean, if we're opening higher for the week and we just hang out, that's fine. If we take out last week's high, what would that require? About a 2.6% move. Okay. Let's get logged in here. Alrighty. So, VIX is retreating 22. I'm still going to keep it at 22.5. That's a pretty conservative calculation. Hopefully, we have a solid Monday trade today with everything inside the range. I want to look at the plus or minus today. S&P. I'm showing plus or minus 67. 67, I'm 68. Now that's pre-market, and this will obviously change fairly aggressively during opening bell. So we'll keep an eye on this one. Hopefully, what this means is wherever I'm putting my daily profit play strategy, that we're 70, 75, 80 points away from current price. I think this should be pretty safe. I might work with a couple levels within that, and then I'll see what I can find for some sticky gamma levels this morning. What I see right now is we're going to be gapping higher, probably 0.7%. So all of my, gamma to the upside is likely going to get hit. Question is, are we going to hang on to it? So from your close on Friday, up about 0.7. So we're creeping right back up to that red dot is my negative and positive gamma pivot level. So that's 66.60. So I could see us pushing there, having some upside to find 6660, 6700. That is clearly the largest gamma level of the morning right now. We'll see if this changes in real time with my dynamic trend, but so far that's going to be a pretty big spot, plus minus 45, 49. It'll probably be something like that, Arthur, once we go to the open. Yeah, they're usually not that far apart. This is just, it's not officially opening bell, so this is reading 67.63. Once we hit the open, this will probably drop to 40. And again, as long as I'm looking at my daily profit play, I'm hoping that we're at least 65, 70 points out of the money to kind of play this thing safe. Because if we're a gap, I mean 0.7%, by the way, 0.7% is 46 points. So, I don't really want to be selling puts that are within 46 points. I want to be selling puts that are like 60, 65 points away. That way, at least I have some freedom here. If we're up above this, and for the day's expected move, maybe it drops into the 40s. If the VIX is retreating, that's one thing is we don't know. Is the VIX going to stay here? Is the VIX going to continue to crush back down? This VIX was still 20. This is 19.5 when the market went nuts on Thursday last week. So are we going to stick around like 22 and change? Are we going to retreat down to 20? Are we going to go back up again? I don't know. So this is, zero DT is a lot of moving parts, a lot of stuff to be dynamic about. VIX is one of those things. We have to be watching the VIX. If you want to call tops and bottoms, you got to watch the VIX. Okay. All right. So let me take a quick look at the SPY. Are we looking to gap up around 0.6 or so? This shows a 0.7. So pretty much right around futures. Futures is 0.73. So 0.7. Pull back to the SPX. Let's go up 0.7. Get a ballpark. So rough open is around 66.49. Okay, so we can start there. 66.49, and let's go up our 1.41. So 67.43. That was a VIX at a 22.5. And that's plus gap. So VIX 22.5 plus the gap. So 67.43 on the upside. And then because we're going to have a gap higher, I'm going to start with a gap and go lower. This is some of the stuff that I taught in the Daily Profit Masterclass. We'll go current or previous day's close and the gap lower. And then 1.4. And this is the one I need to watch, the VIX. There's a 1.4% right there. 65.10. Okay, 65.10. There. All right. So those are our levels. Opening bell in 11 minutes, but still looking at a reasonable gap. Now it might retreat a little bit. These might have to be adjusted depending on the open. If we're not opening exactly 0.7% higher, my VIX box from yesterday or from Friday's close should be right around 1.4%, just over 1.4, just over 1.4. That's fine. Even if we gap higher, I'm always curious if that kind of contains prices from previous day's close to, today's close. We'll watch our ATR levels. Okay. All right. Wanted to show this for a moment. Let me see here. Okay. I'll have to fix this a little bit, but um, let me just run through the numbers. So I'm still doing this all manually. I'll spend this entire week doing it to crank this out, but my spreadsheet is going to be a little ugly, but bear with me. So I've already talked about. Let me see if I can pull in. I'll have some fun and try to pull in my dashboard. And again, this is a rough version of it, but might be hot off the press. So we're still working on this, but income grid trader. And what I'm really liking about this is I'm building in a directional bias dashboard, which I've used my entire career to kind of stay on the right side of market risk. When I think it's safe and best to stay in the positive drift, bullish environment that lasts typically way longer than bearishness. Indecision is as tempting as it is just to like if you're a long-term trader, then holding through indecision is not a problem. Okay. But when you go from bullish to indecision, you have two options, right? Indecision can be just that, and it goes up again, which most of the time that is what the result is. But indecision can also lead to a breakdown, right? And indecision can lead to a bearish phase that might last 30 to 60 days, might last 10 months, might last a year or two or three or eight. You know, I don't know. And so, point is, following some pretty strict rules on when to be trading in this direction and staying with this bias. And I think staying out during indecision, especially for a short-term trade, is pretty solid. It really is. And indecision doesn't last very long because if there's price action, we've seen maybe at most like a couple weeks of indecision and then the market has to go somewhere. It's going to go somewhere, whether it's inflows, outflows, you follow the money, you follow the flows, follow price action. Indecision is not going to last very long. Okay. But I think staying out of it isn't a bad idea unless you're just forever bullish. But the nice thing is everything I'm doing with Income Grid is risk defined. So we can, discuss our levels, and I'd say the most I'm going to trade is probably like three trades a week, three trades a month. We can set those up ahead of time so you can, take whatever you're comfortable with. But anyway, I was running through, I got through like 8 or 9 months of manual testing yesterday. I still have a lot more to do, just because it's a noisy spreadsheet. But let's go. Let me tally them up so far. So win column. So number of wins versus losses. So 1, 2, 3. Actually, I think I just search this and make it faster. I have 32 winners. 32 winners. And let's see here. 1, 2, 3, 4, and 4 losses. So 32 and 4. And this is only after like 7, 8 months. This is 7 months of trading. So I'm going to do this for about 4 years. And I've already done like the rough trading of this. I know what the ballpark win percentage is. Um, I'm looking at this win rate to be closer to like 70 to 80% win rate. If you want to trade a little bit more aggressively, you're going to decrease that win rate. But my income grid is also about making sure that we're not taking on risk that is greater than reward. Okay. Now we can manage reward, right? So if we have, it's coming into the end of the week and we want to take profit, we can enter the trades on Mondays. We can close the trades out by anytime we want. We can close them Wednesday or Thursday or Friday if we want to hit a certain profit target. But to me, that profit target has to be at least 50%. So if I'm pulling in 250 and I'm risking 250, if I'm making 125, that's fine as long as my win rate is high enough. Okay. If I'm risking 250 to make 250, every trade that I'm testing is going to be based on this. Did we make 250? So we don't have to manage the profit. So literally this can be just like a 1-to-1. That way, as long as we win over 50%, we will make money. I want to make this as like mathematically simple as possible because too many traders get stuck in I win, and then a loss can set them back and take away, 5, 10, 20 wins. That never feels good. So this is not that type of strategy. All right. So anyway, we're in the makes of this. I think I have a VIP mode here. Let me see if I can show that. Oh, this is not. There we go. So this is the standard here. And then I've got a VIP mode that will show more levels to trade, more instruments so we can go SPYs and Qs and SPX. We should be able to have a VIX feed on here as well. So it just continues to watch and we'll make this look a lot prettier. This is just kind of a rough version of it, but it should be basically green light for trades that are valid and ready to go, yellow for, pending, or it's going to do something like this where it's like filling up. And red would be just either staying out or we're going to flip this to bearish because this up here, this will be bullish or indecision or bearish. And so we will have a central trading bias. That makes sense? So anyway, more to come. I just had some fun with this over the weekend. It's just a lot of work. Like usually I can do all my option back testing with my software that, has 1 minute option data and I can go back 12 years. But this one's a little bit more nuanced where I've just got to do it old school. And I've done plenty of strategies that have been some of my favorite strategies ever. And I've done it old school. And that's fine because that way I know exactly what I'm seeing, what trades we'll be taking. And the nice part is like every piece of logic is like, are we in a bullish environment? Yes. What trades do we take? These grid levels. Okay. Are we getting filled? Yes. Are we winning? Yes. That's my week. And you can go weekly, monthly, quarterly, yearly if you want to. You can even go daily. So I can make this where you can see up here daily, weekly, monthly, quarterly. We can do as much or as little as you want. So for the trader that wants to be really aggressive and really active, there you go, daily. Weekly, I think is totally fair. It's super active. Monthly, totally fair and active and a little bit less noisy for more of like the passive investor. Quarterly, same thing. So trying to, check some boxes for everyone. That's a little something for everybody, whether you want to trade every day, you like some weekly and monthly income, kind of all the above. Okay. All right. So, and again, we'll continue to build this out and make this, very intuitive. I can't wait to use this as like just a, show and tell and teaching tool like every single week for income grid trading. We know exactly what trades are valid and what trades are getting filled and what trades are close, what levels to watch. Okay. All right. So stay tuned on that. All right. 928. It's almost crunch time. We have price centered here on the daily profit indicator. VIX is at 22.5. So we're back up 22.58. It's not going to change my percentage a lot, but there's 22.54. So 22.58. Now it's officially 1.41. Again, we have to watch the VIX this morning, especially if we're going to talk about some defense trades for daily profit, because if the VIX goes up, we want to take that higher number and move our prices up or down. So despite the gap, despite the gap higher. Look at that. We went from 0.76 to now 0.57. So our gap is clearly deteriorating a little bit. So these numbers are not going to be as accurate. I'll just modify them as we get into the open. Okay, so 1 minute. All right. Let's see here. 22.58 VIX. We'll keep an eye on this one. This doesn't really change what we're doing for the morning for daily profit play. This is more, trying to look at my highs and lows for the day. Let me pull up my real-time gamma. This will give the market a chance to open up, get my deltas on my broker platform. So here we go. All right, 24th. Now we're down to about a 45, 46 plus or minus on the day. Okay. Let me find some deltas here. Again, I'm not liking how there's clearly some skew. Look, I mean, again, if this is accurate, look at how much further we can go up on the call side. I mean, we gapped higher. It's like I'm just kind of waiting for price to settle in here. But I mean, 67.35. We're trading at 50 right now, plus or minus 40 on the day. I mean, I could go 15 delta on the call side, but I'm going to go 11 delta. I'm just going to keep things a little bit tighter. It is Monday. I'm hoping that prices are a little calm after having a wild couple of days last week, but we never know. So let's float this out there. Zoom in here on price. Here we go. So positive, negative gamma pivot around 66.60. We're right in the middle. We've got a couple large gamma levels today between 75 and 10. 66.75 and 66.10. So if I'm selling, bear call spread above this, bull put spread below this, that should keep me out of the way. Should. But I think, there we go. Now things tighten up a little bit. Here's 67.10. So 10 by 15. Hang on. So 67.10 by 15. We're trading at 50 and change. That gets me up about 55 points out of the way for a plus minus 42. 10 delta on the put side. It's just crazy to me how much lower you can go, but I mean, I'll see if I can take this trade for $1. I'm going 10 deltas. Come on. Just got filled for $1. All right. So I'm in for $1. I am at the 67.10 by 15. Prices are moving up pretty aggressively right out of the gates. This is now a 12 delta, but I got filled. So I'm looking at the 10 by 15 on the call side. That's 67.10 by 15. 65.55 by 50 on the put side. I'll put this in Telegram for members. Jeff, I would respectfully disagree with too complicated. If you were in the masterclass at all last week, it's literally the same strategy. All I'm doing is giving ourselves a high and low defense trade. That's not that complicated. That's literally just trading something that's going to help us mitigate the risk, because you know that the reward to risk is not great, right? Like we're pulling $1 credit to risk 4. That's not great. So what I'm trying to do is add a top and bottom. That's, it's calculate. You calculate it. and it is based on dynamic VIX, but it's literally just helping us defend. You know, it wasn't that long ago where those defense trades came in handy, where I had two losing daily profit plays and still walked away net positive. And knowing that you're risking a lot more, not a lot more, but more in risk versus your reward, it's like, why not consider having that calculation? Why not consider playing that defense? So that masterclass that we did last week, we did a 2-day masterclass last week on Tuesday, Thursday. If you didn't have a chance to join it live, please watch the recording, because I could tell that as I'm teaching it, lots of it makes sense. A lot of happy members, and I have some OG traders, and I think it's the best refinement we've done so far in daily profit play, because I don't want to take full losses. It's that simple. If I'm going to take losses, I understand, but I want to take losses gracefully and have something to help me reduce the size of that loss. So that makes all the difference in the world. All right, post it in Telegram. So let's see where it's at. Right now, deltas are shifting up. So the call side delta is around a 14 now. If you want to go delta neutral, okay, you want to go delta neutral. The 15 by 20 isn't a bad option, and the 70 by 65 isn't a bad option. Like, neither one of these are bad. So either a 67, 15, and 20, you can still get $1 for that. 65, 70 by 65. I'm in a little bit tighter on the call side because I was doing that 10, 11 delta early, but price is going up this morning for right now. So I'll type my trade in. Okay, hang on. New trade. Let's see here. Phil, yeah, I'm gonna read Phil's comment here. If you'd post that for everybody, that'd be nice. So Phil says 100% agree. Where was this information when I first started trading years ago? Yeah, well, I wasn't here years ago, not for Prosperity Pub, but now you have me. Chris says, I think you're spot on with the enhancement. Can't wait. Refining DPP is awesome. Yep. Got it. Same thing for you, Chris. Make sure you send that to everyone so we can, keep this chat live for everyone to see comments. Yep. Jeff says, didn't see the masterclass. Yeah, check it out. Go in the classroom, masterclass, and training, and you'll see it timestamped for last week. Tuesday, Thursday were the 2-day masterclasses. And there's also a PDF for notes. So if you watch one of the master classes, all of the notes that you'll see in that PDF are going to like flow through the classroom from start to finish. So let me just get my bearings here. 67 seems pretty gettable for the morning. That is above a 50% ATR though, so it's not quite awesome for double ups, but I don't mind this trade. Anyway, let's take a look at our VIX. So VIX is now going down, which is kind of nice. That's nice to see that. 21.79. Okay, fine. If I'm going to call a top on the day, so we open up here. We still had. I'm gonna use the same kind of calculation. We're not at a 22.5. We were there for a moment. I saw as high as go VIX. This was this morning, right? So 8:55 a.m., 9 a.m. I mean, I guess not. Like 22.5 is fair. Okay. Placing a 10 delta neutral. Okay. So trades in. And I'll mark my levels here. I'm going to keep an eye on the VIX this morning. In case the VIX is going a little bit higher, that'll make my adjustments. So I'll add a chart alarm above 23.7 VIX. Obviously, if we get surprised where price does want to go to the upside, I mean, realistically, it's like a 22.5 VIX, and we could have this upside move. So I want to be aware of that, right? So let's take our gap. Let's go exactly to our open this morning and go up 1.41. So now I've got a 67.35. So I'm going to say 35, 67.35 to 67.40 potential gap. Or I'm sorry, potential high today. Based on a 22.5 VIX, which we are retreating down to 22 right now. Okay. So 35 to 40. I am going to pin that bad boy. So that is a 35 and 40. See if we can get this one filled for $1 and potentially pin that. So highs, actually, to be safe, I'll go one strike higher. Okay, so we get filled for $1 on this one. Okay, I'm not going to call the bottom right now. I think just the high trade in case it's one of those days where we have like the upside risk. If prices just calm for the day, that's totally fine. My levels that I need to be mindful of. Let me take this close, go 1.41. Now we're looking around 65.10 bottom. Okay, that's still about the same. Let me get my levels here. So I have my 10 and 15. So 67.10 and 65.55. Yes. And 65.55, which is just below that October 10th low, which we did test this. I guess I could get rid of that line. We kind of defended it last week, which was nice. Yes, granted, we came below this. This would have been Thursday's close. Friday's open did push a little bit lower and then, rally back up for the day. So 55 for today. Let's move this down here. Okay, so I need to see price for the day below this line, above this line for my buck. Dollar credit. I will hold this thing probably to 70 cents or less. I'm going to try to get out with the lower deltas at like 50 cents. So 50 to 55, I'm generally pretty happy with. If it's looking like today is just an absolute nothing burger of movement, then I might hang on to it a little bit longer and probably close it for like 30 cents or less. Okay. Starting to get some interesting gamma flows here. We still have some pretty big kind of up and down gammas. So 66.10 and 66.75, both look kind of gettable. Not necessarily price is going to stick there, but just like finding this level and falling or finding this level gap filling and falling. But I'm just going to keep a close eye on this. We're kind of hanging right out around this positive negative gamma pivot today. So keep an eye on that one. Let me see if there's a way to craft. I'd love like a kind of a center trade here without risking a ton. If price can kind of close out very flat today, I don't know. I mean, honestly, it's like we could be here and go up a little bit, go down and finish flat. We could go right back to the gap. I just don't want to throw a bunch of random butterflies out there. I see your comment there. Finances started last week with a loss like every new strategy, but love the strategy already. Good. Arthur, when you say delta neutral, do you mean the same deltas? Yeah. Yep. Because right now there's natural pricing skew in the options chain. You're able to go, the 10 delta is quite a bit lower than the expected move. But the call delta is a little bit closer. So and again, that's the nice thing about being delta neutral is because that will allow you to trade, higher or lower volatility and allow you to trade like the natural pricing of the options market. So being delta neutral is always a great way to stay very dynamic with current conditions. Yep. Thanks for reposting that, Chris. I see that comment there. Ability not to get crushed and lost. It's spot on. Yep. Good. Let's see here. Interactive brokers and Tasty. So Tasty doesn't do demo. Interactive brokers, I don't know if they do. I think the best demo account or paper trading account is probably Thinkorswim. Thinkorswim probably has the best trading account. They'll do like paper trading for 100K. So I will say though, What that helps you do is get more comfortable with the broker platform. The actual like fills and executions are not going to be the same as real price. So what I mean is if you took the same trade that I took this morning for daily profit play, it might show that you're in profit within 10, 15 minutes. And I'm probably gonna have to hold that trade for 60 minutes or 90 minutes. That is the one thing we noticed from, I just saw this a lot last year when I was first teaching the strategy and I had some traders that were learning on a paper account. They'd say, I'm out. And I'm like, it's been 2 minutes. But it was because it was just like the option chain is, market more like a simulation versus sometimes the implied volatility is not as accurate. That's the only difference. But to get comfortable with finding your trades, executing your trades, managing your platform, that's a great experience with the demo account. Okay. Yep. More generous. Exactly. Okay. Interactive Brokers does have demo accounts, getting good reviews. Okay. That's fine. I would say if you had the choice between the two, Interactive Brokers ultimately going to cost you more as far as fees and commissions versus Thinkorswim. So if you have a Schwab account, Thinkorswim is generally pretty cheap around the round turn for an option contract than Interactive Brokers. And also they'll listen. So if you were to, trade for a couple of months and you're very, very active, Thinkorswim or Schwab is more likely going to listen to lower your fees. Interactive Brokers, even when I was with a hedge fund, wouldn't touch our fees. They wouldn't lower our fees at all. We were paying enterprise level data feeds, which was like robbery essentially, and our fees were super expensive. So nothing against Interactive Brokers, but they didn't get the memo when all of a sudden Robinhood's offering free trades, and they're like, we're not going to do that ever. So their fees are pretty high. Butterfly is pending. Yes, correct, David. That is correct. Yep. VIX at 22.2. Let me see. I might sprinkle in if I can get. Here's a 7 delta. Here's a 12 delta. So I can go. I mean, we're doing pretty well. We're back to delta neutral now. Here's 10 on my call side, and here is 11 on my put side. That's pretty textbook. I'm going to go 60, 65 and see if maybe I can go 20, 25. If I can get this one filled, I'm going to go, let's see, that's a slightly higher put. I'll go lower. I'll go 45.50 and 20.25. See if this one can fill up for $1 today as well. I'm going to try to get in another daily profit play for $1. Pending, it's not filling yet, but I'm just going to go a strike higher for a 20 by 25 and strikes lower, the 45 by 40, and see if that will fill for $1. So I'll have 2 trades running at $1 each and see if we can have just like a really solid Monday. If each one can, shave off 50% or 30, 40% profit, that's a pretty good win on the day. But this one also may not fill. Let's see here. Beverly, Bill says still waiting on the fill. Hopefully not. So the trade that I'm in right now. Okay. Well, it's already offering a little bit of profit this morning. So Bill, it's delta neutral at 10. If you wanted to go, maybe 1 strike higher. So a 60 by 55 is 90 cents. Maybe going slightly higher on the put side would pay, 65 by 60. That's flashing, 95 cents to $1. So if you were to increase the put delta to like a 12 or 13, that might help you get the fill that you're looking for. Because again, the call side might be tested on the upside, even though I don't really see a lot of big gamma levels at 67. What is gettable though is like if price is going to go higher, I wouldn't want to move my call side closer, right? If we're going to hit this like 66, 75 zone, I wouldn't want to put my call side closer. I would just consider moving my put side up a little bit if you're looking for that buck. Okay. No, I wouldn't. And that's one thing I don't like to do is I don't want to drop the credit. I don't want to take less credit. I talked about that at like a lot in the master classes last week is I'm setting the credit where I'm comfortable with the risk. There's no reason for me to take on more risk to still take like a good delta neutral trade. I think that's a fair balance, like getting filled for $1 and going like pretty low delta Getting filled for a dollar at a 10 delta, it's a really high probability profit. But some days when I go 10 delta, if it's only trading for 80, 85 cents, I don't want to take on the extra 15, $20 of risk. I know that's silly, but it matters to me. Unless I'm going to take on that 85 cents and say, okay, well, now I also want to have a defense trade. I want to have a defense trade because then I can justify the $20 when I've got a defense trade that offers me another $100 or potentially a profit trap of $500. You know, but I'm trying to keep the math pretty simple. Okay, and that's great. That's a great mindset. There's always another trade. You're spot on. I love that. Okay, so let me go into here. Oops. Let's go DPP. So trades in. It's already up about 30% right now. That's great, actually. Let's see here. Waterfall. The bid ask is all over the place here. We're up about 30 to 40 bucks on that waterfall trade. Not bad. Some of these others with the volatility last week were taking just a tiny little drawdown. But again, these lines of the sands are pretty low. This one's close, but I'm only risking like 445 bucks. This one's at 61.40. This one's at 62.40. These are all the lines in the sand where it's like our risk wouldn't hit until we're at 61.40, 62.40, 58.10, 59.90, 61.40, 57.20. That trade got filled last week. 63.90 and 58.20. So again, like price would have to continue to fall through December, January, which I'm obviously hopeful that there's some type of, holiday stability. This week would be an important level, is that we don't just, tumble down. Or if we do, we at least have a bottom and the market makes a meaningful holiday rally. So just, let's keep an eye on things. Richard says to walk away. No, you can play with the numbers, right? Like look at a 10 delta, look at an 11 delta, play with the numbers, go 12, 13 delta, play with the numbers. Just saying, like, don't take more risk when you know roughly what we're looking for. I mean, if you're going to go 5 wide, I want $1. If I'm going 10 wide, the hard part is even if I went 10 wide right now, I'm not going to get $2. Okay. Look, if I take my trade this morning, okay, I take my trade right here, which right now is offering me 85 to 90 cents. If I just go 10 wide, does this actually double my credit? No. Right? Like, I mean, if I'm getting 85 to 90 cents, I'm only getting $1.45 now, $1.50. So all I'm saying is just have like a credit number in mind where you're not forced to take on more risk. And you can always tweak. I can always tweak the numbers, meaning like I can move my deltas. Here's a 10 delta call side. It's now 6,700. Here is a 10 delta put side. Okay. It's all the way down to 65.35 because price has just pulled back. 0-day options data is very sensitive. You will see your deltas change. That is also why if you are, does anybody trade like directional 0DT? Does anybody buy calls in 0DT or anybody buy puts in 0DT? And I say that because, like, look, I've been doing 0DT for 3 straight years. When this first started back in 2022, like I ran an arm of the fund I was with for strictly 0DT. And I mean, I traded really small because it was like, let's just test the waters and see what the 0DT stuff's about. But when I could get a flow on the day and find some general direction, I mean, you can buy a call and make 200%, 300% when you're right. But what I discovered most of the time is you're going to lose on that trade every single time because the deltas are so sensitive. And if direction is not working almost instantly for you, you're going to see time decay show its ugly face like it always does when you're long an option, and it just works against you. Like, I mean, a time decay curve is the same even when, if this was a 90-day trade, time decay looks like this. When this is a 0DT, time decay looks like this. And once you hit that halfway point, you are toast. Because if you are not getting the directional movement that you want, you are going to have a very difficult time getting the money that you want out of your trade. And I keep saying this, but there is about 10 times the gamma risk in 0DT. That's how ridiculously sensitive these deltas are. Deltas and gammas, they go hand in hand because deltas is the, change in the underlying price, and gamma is the fancy word for basically the accelerator or the turbo on how fast deltas can change. And it's way, way faster in a zero day environment. So that is why the most consistency I had with winning zero DTE is trading spreads, because most of the time market doesn't move. During the day, markets don't move that much, and take advantage of that. That is why market makers do their job, right? So I'm just saying, like, be on the right side of the smartest, hands in the game, which is market makers. They have done this stuff better than you and I for 50 plus years. And now they have to do it. And it's like all their jobs are probably even harder because of zero DT, but it's okay. That's why it's their job. But knowing that this is a, accurate phenomenon for market efficiency, this is why daily profit works so well. Okay. Right. So yeah, when you're right, you can be. I mean, I've seen literally, I've seen 1,000% winner for a zero day call option or a zero day put option. How did I get that trade? It'd be something like this. Let's go back to this would be an example, that crazy day that we saw on Thursday. If you were watching this and this support broke and you're like, you know what, I'm going to buy a put option and I'm going to try to take it back to the gap fill. Let's say that this put option at the money was going to cost you like $1.50. Right now, that trade is probably trading for $5, something like that. Like, you literally made a couple 100%, and then later on in the day, it's worth, $7 to $8. That is insane, right? Now, that's amazing for the one time that happened in the last time that happened would have been October 10th. So you go from October 10th having one huge opportunity, you go from November 20th for one huge opportunity. You can't show up and trade every day thinking that that's what you're going to get every day, because it never happens. It's rare that this type of day happens, but that's the the 500 to 1,000% winner. So this is why I teach double ups. This is why I talk about iron flies and butterflies, because those are strategies that are built with 10 to 1. Those are strategies that are built with, even intraday, you can still make 50 to 100% here, way before expiration. That's a lot. If you want to make 100% consistently, it's not going to be, to me, this is my opinion, but I don't think you're going to make 100% plus consistently by, buying calls and buying puts. It's way too time sensitive. It's way too price sensitive. It's a lot easier for me to make triple digits when I'm doing, butterflies and spreads like that. Okay. I would say that so far today, this is looking pretty great. Call resistance here, put resistance here, a wild couple of days. Market makers right now are probably in the game of just crushing some volatility and trying to neutralize all the whipsaws that we saw on Thursday, Friday last week. So if that is true, then we hopefully are going to see prices relatively contained today for most of the day, enough to give us the profits that we want. Okay. How about the normal movement market of the day? Yeah, they do terrible. Like, here's a good example. If you're looking at price action for today and you buy a call, if you buy a call, you better take profit when this thing goes up about 15 points, because if it stalls here and goes back down, you're going to be pretty much eating that full trade for a loss. So if you buy a call, you better hope that thing wants to make fresh highs for the day and stay there. If you buy puts, you better hope that thing wants to make lows for the day and stay there and keep going. That's how you're going to get paid the most money. But every single day, if you had a gun to my head, if I've got to trade directionally, I would say no, thank you. It's just not consistent. Most of the time, the market is going to be within the market maker move. That's way more consistent, way more reliable, and way more efficient. Those are the probabilities. So anyway, gamma looks pretty good. So some pretty good call levels, pretty good put levels, and we're staying right around that sticky, that 6660 is that positive negative gamma pivot. So we might just kind of hang out here for the morning, which is totally fine. Okay, we'll keep an eye on the VIX. VIX is at 2213, so it's not going higher. That's encouraging. We'll just let price do its thing. Okay. Um, I had a little joke this morning. Somebody, I saw it on Twitter or X, but apparently Michael Burry. So we saw the big news a couple weeks ago, or was it last week, when he was delisting his fund. So Scion Management or Scion Capital Management, he was delisting the hedge fund he was with, um, and now he's offering a Substack, which is paid content for like $380 a year. And my joke was, you too can learn how to short AI for $380 a year, and you might be right anytime between now and the next maybe 10 years. So good luck with that. Like, I don't think Michael Burry is going to give Substack material that's going to say, I'm going to be long all these things. I think he's going to go Substack and probably still talk about the bubble that we're in. So maybe I could be wrong, but I'm not going to pay $380 to find out. Uh, when the guy's been wrong, basically since 2008 on many, many big calls. And granted, he was long China. Cool. I was long China as well. I didn't need Michael Bird to figure it out. I just thought it was funny. It's like he's pivoting into like content creation, newsletters. So anyway, bonds TLT. I'll take a look. Let's see a little top down here. So we have some gains on S&P. Nasdaq's up over 1%. Dow's up 0.15. Russell's hanging in there. Russell's making a nice comeback over 1%. VIX is down below 22 now. That's encouraging. Dollar index still flat on the day. Oil is up slightly. Gold 0.46. Silver 0.65. I mean, don't get too excited about gold or silver. I think all this excitement for the last, I'd say 2025 has been one of the more exciting years for gold. Um, at best, it probably comes up to test the highs and consolidates. I think if anything, if we're looking at long-term bulls and everyone loves gold so much, it's going to be an accumulation phase up here where it's going to consolidate just like it did before. And I talked about this for months that it was consolidating. I said, if that's a rise or if that's a ascending triangle, ascending wedge, then when the bulls got us there, this market likely breaks out and keeps going. And so we measure this move to this move. Like you take this last consolidation period, you measure that out, and that was almost exactly symmetry. So if we're going to do something like this, where it's going to make, a wedge pattern, don't get caught off guard by thinking like that first breakout is a sign of this thing's going. This to me has to hit the 200-day moving average. So if you're lucky, gold doesn't really do too much damage to the downside, and maybe it does the same type of pattern where it just kind of builds its way back up like this, make some type of ascending wedge, and we just break and go higher. That would be really lucky if gold did something that simple. Okay. I still think that if we have some type of weird, and I'm putting this like in the next, I don't know, the next few months, this 200-day moving average could get tested. And this could be a weird, sharp, crazy volatility thing. I'm just going to throw it out there. It is very possible that this market, the S&P, for example, could have a ugly, ugly holiday, and we could still come down and hit this 200-day moving average, or we can come back and retest this previous all-time high. Now, I don't think it stays there if it does that. If we come down to hit the 200-day, it's probably going back to the high shortly after. If we come down to hit this level, it's probably going at least halfway up shortly after. If we have a choppy, volatile, kind of orderly correction for 5%, which we've had, maybe up to 10%, which we might see, if it's organized, then the market kind of slowly grinds its way out of there and grinds its way back up. Okay. But how many of you are a little bit more familiar and more comfortable with these reflexive rallies that the markets have given us? Like a really ridiculous sharp move is followed by a really ridiculous sharp move. So if we had a ridiculous sharp move, it's going to be followed, I think would be followed by a ridiculous sharp move. Now, whether that's halfway back or all the way back, I don't know. But rarely do we see the market sharp, sharp, sharp. That's very rare. So usually sharp is followed by a recovery. And then if it's a lower high, sharp again, and it's just head spinning volatility. So I just don't want anyone to be surprised if we pulled back to this 200-day moving average, pulled back to previous all-time highs, had a nice little 10% correction or so. This would be about 9% here at the 200-day and about 15% here. Maybe less. Let me check that all-time high. So from our recent all-time high to this one would be around a 11% correction. So, I mean, I don't know what it would take. I feel like a lot of the noise has kind of been absorbed. Tariff talk has died down a little bit. The Fed was dramatic. Maybe it's the U.S. data coming back online. Maybe all this U.S. data that's finally going to hit. The market's got to digest it. Maybe it's something we have to pay attention to. Okay. All right. Bill says filled on. Good. Okay. Let me see what my other trade's doing. I've got the one above. So the 20 by 25 is trading for 75 cents right now. I'm not going to get that fill. I'm going to put that in for a buck. Right now, that's still trading about the 12 delta. And let me switch this one. So I was going to go 2025. So if I go 2025, maybe shift these up a little bit. That's 80 cents. Okay. Gamma wise, things are settling in. We're above the positive gamma. For a second, like it has to stay there. But you can see my live gamma 6,700 seems like gettable today. So I'd want my call side to be higher. I want my call side to be like at least the 20 by 25, hopefully out of the way. And then my put side, it's a little closer. Let's see. Let's just chill on that for a sec. So could I go buy, sell? I could put another broken wing in here. I might do that actually. All right. I'm going to try to I'm going to sprinkle in a couple extra broken wings. Buy, sell, buy. So it'd be $1,000 profit trap. One's likely not going to fill. I could overlap these. So this is a buy, sell, buy overlap. Okay, I'll put that in for a buck. All right. So I'm going to throw in some broken wings that are sprinkled in. So I'm not going to put in an extra daily profit play just because that would be $1 credit and $400 risk. If I'm doing a broken wing, I do a 20, 25, and 35 for $1. That gives me $1 credit, which I think is a high probability, plus the $4 or the $5 profit trap in case it finishes there for the day. And then above that, I do my defense trade, which is what I call the top as based on the 22.5 VIX. Right. So I'm going to sprinkle in some broken wing butterflies up here for a buck. I mean, none of them are looking good to fill right now. One of them is, trading for 5 cents. I want $1. One's trading for 20 cents. I want $1. One's trading for 0 and I want $1. So in order for those to get filled, price has to go significantly higher. And that is a tough thing for price to do right now. So realistically, it's probably going to be a winner today on daily profit play. And the dollar, just keep an eye on it. If it's trading for 70 or 60 or 50, take profit. Take profit, manage the trade. Take the winner on the day. And then if these don't fill, it's no big deal. Okay. Let me do this. Blake, I'm going to hit you up in the chat real quick. Okay. Yeah, I sent that in Slack. Because what I'd like to do is while we're kind of hanging out for the morning, Um, we have waterfall 11:30 a.m. I wanted to kind of start. So, everyone that comes to my daily profit plan is kind of my, live session, trust content, get some new spectators and watchers, and then you become members and, get sprinkled into all my other services and stuff. That's great. But for my anatomy of a trade segments that I'm doing this week, I might as well pull the audience since we got a nice crowd today. Let's see what we can teach. Let's see what we can talk about. I'm going to see, and maybe this is just like a giant round table where it's like just rapid fire these strategies and I can, go through them quickly, or we can go through, as slow and methodical as you want, or as like rapid fire as you want. I mean, I'm not trying to like, you know, make it unlearnable. I just want to make sure, like, if you are asking about a strategy, I want to be able to address that. Okay. I have had plenty of strategy sessions where we spend, an hour or 2 hours just dissecting one trade from start to finish. And what my goal of a session like that is that you now are very familiar with what that strategy is and how to apply that into the markets. That makes sense? So if we want to do more of a rapid fire thing, that's fine. Okay. So let me do this. Let's take some notes today, and I'll type this up. So let's go Notepad. And I will go anatomy of a trade. So now I'd like everyone in the room, give me some trading ideas. Give me some strategy ideas. Strategy types. Okay. So what can I help with? So whether this is anatomy of a trade or an ask me anything, I don't care. Whatever you want it to be, but I want these sessions to be for you. I obviously want you to show up. I want you to be asking about this recording. I want you to, ask our support team like, "Hey, Chris, this anatomy of the trade thing, I couldn't find it live. How do I get it?" I'll have it recorded. Okay. So give me some strategies. I've done, and I can do this. So I've got, let's see here, long call, and then bull call spread, bull put spread. I have a video on that. Long put, bear call spread. I'll do bear put spread. That's a debit spread first. So debit. So this one's also a debit. And bear call spread is credit. Okay, I have videos on those. In fact, let me see if I can find it. I know it's on my YouTube session. Let's go here. Strategy. Looking for my specific thumbnail. Well, here's one way to do it. Covered calls, credit spreads, strangles and straddles, long calls, and long put options. So if you come to my YouTube channel, I do have those videos. You can just search for Options 101. There's some really good videos right there. 15 minutes, 16 minutes, 15 and 17. Let me see if I can find in my live section. It's going to take a moment here, but we'll go back to some of these. It's one particular thumbnail that's like strategy session. I'll find it. There it is. How to trade pros with leaps, poor man's covered calls. We talked about that. This one here, master the butterfly spread. So if you see this thumbnail, this trading 101, if you see that thumbnail, those are similar to what I'm doing, like anatomy of trade, just kind of a full breakdown of a strategy type. Here's one. Fast track to profitable trading. This might be for like basic spreads, long call versus bull call spread versus bull put spread. So bullish spreads, or a long put versus bearish spreads. Take a look at this video. So I'll share this link. Okay, there's a video link for you just for covering what I just wrote out here. You want to cover this stuff? Watch that video. Okay, what else? Let's see here. The 3 different butterflies you took last Friday. Okay, yep. So we've got butterfly and iron butterfly. Okay, we can talk about that. Diagonal iron condor. So Omar, are you saying that you're doing like a spread at different dates, or is that the right name for it? Because usually diagonal is referring to either similar strikes at different expirations. That's a calendar spread. So I'm not sure diagonal iron condor if you're using like spreads at different dates. Let's see here. Somebody put in 1 DTE. What was that? I missed that one. Does the width 5, 10, 15, 20 of the wings impact rate of time decay? It can, David. We've talked about that in the master classes. So in my experience, if you go wider on the wings, so a 10, 15, 20 wide tends to give you faster time decay. So, and again, it's what I think is one thing that's the most impressive thing about trading options is there is always a fairness and a trade-off. So if you go 10 wide or 15 wide or 20 wide, you are clearly taking on more risk. But the wider you're going, it's almost as if it acts as a synthetic because it's out of the money enough that it's harder for those out of the money prices or those further out of the money prices to have the same sensitivity as what you have on your sell premium. So we have experienced this when we first started this strategy. It was 20 wide, and we would just manage the trade from start to finish, and we use a stop loss. Why did I not do that continuously? Because 20 wide is a lot of risk. And when I've got new traders in, and our wins are $60 to $100, and our losses are $1,500 or $1,400 or $1,600, no thanks. It's like I can stomach that. I still don't like it, but it's certainly difficult to get traders at the very beginning to wrap their heads around that. And also, when you get blown through a couple of 0 TT stop loss, it's never fun. Because what would happen is we'd put a stop loss in, and the broker would spit through it like by 30 or 40 cents. And then I'm like, well, am I going to close it now, or am I not going to close it? And I'd end up taking like an extra 50 cents to $1 risk when that's not the point. So anyway, the trade-off is this. If you go wider, you tend to get out of the trades faster because the out of the money is not experiencing the same type of sensitivity as your sell side. So that's a good thing. That's a good thing if you want to go wider. The bad thing is there's just more risk. There's certainly more risk on the wider you go. Okay. Let me see what else. I know I had somebody that messaged on a 0 to 1 day in the money SPX vertical call spread. I mean, do you want to see like the data on that? I mean, I know that for the last 50 years, since 1974, that the average bull day is 54%. Now, that doesn't include intraday price action. So if you were to say, today at 3:55 p.m., I'm going to buy a, in the money bull call spread. In the money, you're going to pay a lot more. You're going to have less reward, but you'll have a slight increase of probability with positive drift. So you're looking at probably like a 54% win rate, maybe 60% win rate. If you're in a proper bull market and positive drift is a thing, and then day after day, if the market's gapping and going higher, I'd say where that trade struggles is when you're in indecision. We're still below the 50-day moving average. That matters a lot. We're in a total indecision environment right now. So if you were to look at something just as simple as, that strategy, if you're above a 50-day moving average, I mean, you can go back as far as you want. I mean, you can see that if we are in, and this goes back to like my income grid. Look, if we are, see this thicker blue line right here. I know I've got a bunch of lines on my chart, but this thicker blue line right here. Okay. Once we're above it, if you maintain a bullish posture there, you're going to do pretty well. Yes or no? Okay. And when we're below it, if we stay out of the market, we're going to avoid a lot of the pain that the market throws at us. Yes or no? Right. And I will say this, I do think that the market cycles that we deal with are going to be faster and more violent. And so the times that you see a crossover like this, you're like, Chris, we should be bearish right now. This bearishness might be over in 30 to 45 days. And then the bullishness resumes for months and months and months. That is a lot easier trading environment. Okay. It is hard to make money as a bear unless you are either, you can make a lot of money as a bear if the leverage is insane. Meaning, like, you don't have to be leveraged. I'm saying that the payoff is leveraged. Like, example is my crash insurance masterclass. I have one trade that is out to, unfortunately, I think it expires in December or expires in April, but it's a 44-1 reward to risk, if I'm right. But the odds of me being right are like probably less than 10% right now. So I'm essentially wasting it. Okay. But if I'm right, I was going to take like a $900 risk and make over $40,000. Okay. Which is awesome. But it's very, very difficult to do that. So anyway, point is, this is why, income grid, it's like I'm just picking really tried and true and tested and reliable direction. The market is a lot easier to trade. Look at this thing. From 2016, we had a 2-year range, but you can see that from trading into, 2013, if you stay above the 50-day moving average, you can trade a 0 day, you can take a 1 day, you can take a 1 week, you can take a 1 month. You're giving yourself time to be right. There's plenty of time in this bull market. Once we get a crossover, stay out of it. Get back above, stay in it. A poke below and a couple, this is the daily chart, a couple days below is not the end of the world, right? But it's not a game of perfect. This has been one of my like one-on-one sessions over the years. It's like trade to be profitable, not perfect. Like trading is not about perfect. It's one of my favorite sports psychology books from Bob Rotella. Golf is not a game of perfect. It's true. Trading is not about being perfect. We're going to have losses. The point is, don't lose a lot. The point is, understand like what a reward and risk is. But this market will reward you with, more ways than you can imagine by just being consistent and not over trading. And I think it's actually more difficult to trade the market literally up and down. I think if you can acknowledge that the market likes to stay up for longer periods of time, generate as much consistency and gains as you can, and then when it gets a little bit dicey and indecisive or bearish, then stay out. It's okay to stay out. It's okay to sit this thing out. It's okay that if we turn and we're going to drop 10, 15, 20%, it's okay to not be involved. It's okay to be sitting in cash. It's okay to have something where you're just like sitting on the sidelines and maybe getting some 3 to 4% yield on your cash while, the market's kind of figuring itself out. Okay. But just a simple 50-day moving average goes a long ways. And when our 50-day is above the 144, when the 50 days above the 200, that's a good macro environment. Institutional grade stuff like Wall Street, they can pretend they have all these secrets, but literally some of the biggest hedge funds in the world will run with literally the 50, the 100, the 144, the 200-day moving averages, and they put on like a 10-month moving average. Because in the bigger picture, weekly supports and monthly supports are big for order flows, like forced buying or forced selling, going into bonds and equities, like that type of exposure, whether you dial it up or dial it down. It's all based on some of these like really simple technicals. So that is why right now it's like, yeah, we need to just let the market marinate for a second because we are at the 50-day. We're getting some indecision. What we don't want to see happen is if price continues to get beat down to the downside, if price beats this down a little bit, and we cross over the 100, it's not that hard to get from the 100 to 144 or the 200. And then we have to really wait for like some type of trend line like this, let this thing bottom out. Don't force a trade here. It's okay to not be bullish when the market is clearly crossing over and going bearish. But once we start to get more aggressive price action, it's okay to start looking at the coast is clear and things return. Okay. Which book? It's not a trading book, Beverly. It's a golf book. Golf is not a game of perfect. By Dr. Bob Rotella. But I think that playing competitive golf has helped me in a way to be a pretty good trader. There's a lot of self-talk in golf. You spend 4 hours, 4.5 hours, 5 hours in a tournament. You're doing nothing but talking to yourself. So, when you can at least keep your brain in check and like get into the present moment, execute a shot that's right in front of you. All that matters is the one shot in front of you. Same thing in trading. All that matters is like you focus on the good trade. You can have a bad trade, but you understand that there is a risk to that trade that it's like, okay, make it insignificant. If I lose a trade, it shouldn't hurt me emotionally. Because once you're bulletproof like that emotionally, then you can do anything in trading. You can be as active as you want, knowing that like I'll be fine. My gains will take care of themselves. I'll win a lot more than I lose, and let the math do the work. Okay, yeah. So it's not a trading book; it's a golf book for all my golfers out there. But it's a good one for just psychology in general. So that guy is tapped into more professional athletes on the golf side, which again, you can argue. I don't. Who cares? I'm not going to talk about golf. I mean, it's been a game I've played since I was, you know, 5 years old, and I still love it. It's a game you'll never master. It's a game where perfection is unattainable, and that's what trading feels like too. I'm always uncomfortable as a trader. Always. I'm never complacent. I feel like, I reserve all the right for literally every one of my strategies. That if I feel like something isn't working, if something isn't working, I'm going to change it. Like there is no just like do this forever. I mean, the nice part is you can build strategies around what this market has done forever, for the last 50 years with options, for the last 70 plus years as modern S&P, for the last 100 years. And for the most part, you all know that if you're bullish, you're probably going to make money. And yet, look at how much time and media and newsletters and emails and everything that go. I mean, I get 100 emails a day on the next bear market, the next bubble. It is just anything to get you to click, anything to get you worried. But it doesn't make you money. It's like, unless you're going to take a little bit of money, like, look, I'll take $1,000 if it can pay me 50 grand on a winning bear trade. But I also realize that that is $1,000 that I have to be comfortable risking because it's probably going to be a full loss. So, I mean, I can remember back in I was in Asia at the time. I was over in Vietnam and in Singapore, and I was a golf instructor. But I remember getting newsletters from Stansberry and Associates on the death of the dollar. This was over 15 years ago. And they're still talking about this stuff. It still exists. The debasement trade. It's like, this is nothing new. But it gets you to click on it if you're worried about stuff, But it's a terrible decision. It's a terrible trade. So I just don't think there's any real thing as like you can't be all in on anything. I think trading is about surviving in base hits. If you make a bunch of base hits and you get on base 70, 75, 80% of the time, you're going to be fine. If your reward to risk is proper and you're winning more, or you're winning bigger than when you lose and you're winning 55 or 60% of the trades, you're going to be fine. I've taught this many times, but the only time that I see traders struggle is you don't realize what your strategy is for, right? There's the quadrants that I keep referring to, and it's reward to risk and it's win percentage. So if we have a win percentage here, okay, so this would be high to low. So high win percentage and low win percentage. Or you have reward to risk here. Okay, reward to risk. So if you have a high reward, low risk strategy, be here. Okay, you can make money in 3 of these 4 areas. You can make money here. You can make money here. You can make a little bit more money here. Because that's to me, like, it's not the easiest strategy, but if you make more money on your losses and you have a higher win rate, that's like the ultimate magnifier in trading. So if my average winner was, let's just say $200, my average loser is $100, and I win 50 to 55% of my trades, that adds up really, really fast. So that's the best quadrant to kind of find a strategy, but it's also the most challenging because not every day does the market offer asymmetric reward to risk. In fact, usually it's backwards. And most of the time, you want to know where market makers are? Market makers are here, where they just win a crazy, I don't know if you can see my mouse. Market makers are here. They just have a crazy high win rate, right? This is literally the standard for daily profit play. So yeah, they take on risk, but if they have a bad day, they roll that risk for a day. We saw that. I mean, last week is a good example. Crazy Thursday. Even though Friday was volatile, the market maker move was still inside. The open to close was still inside the market maker move. So even for a wild and crazy Thursday, they came right back around and defended Friday. And today, what are we seeing so far? Prices have, ripped at the open, been volatile, but we had like a plus or minus 46, and we've only moved about from the open. I mean, I guess it's not nothing. We did move about 35 points in the morning. So we'll see if they stay. We'll see if they stay within like the plus or minus 45 or 46. But where traders fail, and this is where you have to be really honest with yourself. Where traders fail is right here. My wins are not frequent enough, and my losses are typically way bigger than my wins. So if your average winner is $50, your average loser is $1,000. That's not a good start. And on top of that, if your win rate is only 30% or 40%, that's going to suck. So just don't be here. As long as you're not here, you can make money so many ways. There are so many strategies that can do this, high win percentage, even though it might be slightly backwards reward to risk, but your high win percentage takes care of it. This is probably this is the strategy right here that I think most traders have to be the most resilient. You have to be resilient here because you'll trade and get very confident, and you trade with this almost this arrogance that you're expecting to win. And then traders get a little over their skis, they reach a little bit further, and they trade a little bit larger, and they take a loss that they didn't realize they weren't comfortable with it. So you got to be careful on the high reward, the high win percentage, but it's a low reward to higher risk trade. It works, but you have to be able to make those losses insignificant emotionally, and you'll be fine. You can trade through anything that way. Okay. The high reward to risk, I think traders in this area have to have a great mindset because you might not win all of your trades. In fact, you'll probably be lucky if you win 50 to 55% of your trades. But if I could take trades, this would be my double up, for example. Double up strategy for me is if I can win 6 out of 10 trades, I'm still going to make a lot of money. Because if my risk is $100 and I could potentially make $500 to $1,000, why would I not take that trade and still win 50? I mean, I'm winning 59% of those trades, and my winners are way bigger. But I have to also be comfortable with losing more often, because in order for a trade to offer such high reward to risk, you're going to have the win percentage be naturally lower. Okay, and then the most challenging is this, which is balancing the two. I want to make as much money as possible with the highest possible win rate. Then you have to be really, really picky and use a lot of discretion to find those examples. And there's still not guarantees. So just because you can make more money in the upside doesn't mean that you're going to have the highest win percentage. But if you focus on good quality trades, these set up. They just take some discretion, they take some consistency, and they take some patience. And some traders don't have that. So anyway, yeah, there's a lot of ways to do it. There literally are hundreds and hundreds and hundreds of strategies that they're all going to fall somewhere in this quadrant, like somewhere on this chart. You're either making money or you're not. And when you are making money, it's probably one of these three. When you're not making money, it's probably here. Your losses are too big. Your win percentage isn't high enough. So, I mean, from that standpoint, it doesn't have to be complicated. It's just, what are you doing as a trader that's either moving the needle and making money, or we're struggling? Because this is also what I spend a lot of time dissecting in private sessions with people. It's if you're struggling, what are we struggling with? And a lot of times it is risk management. So, and I don't have a better solution for risk management outside of trading smaller. I know it seems crazy. And where people get it wrong is they just think about, I need to make this money back. I need to make this money up. I need to make this. I understand that. But if you are so uncomfortable every time you take a loss, you're never going to be able to trade through the pain. So make the losses suck less, make the losses hurt less, and you can trade through anything. Okay. All right, let's do this. I took some notes. The 0-1 day, I answered that question. Any other? I saw somebody when I said Jay Lizard, somebody says, "Yeah, Jay Lizard. We can do Jay Lizard." Diagonal spread or a calendar spread. Okay, and I may not get to all these, but let's see. Straddle. We can do long short straddles. And a long short strangle. These are just fancy names for just different ways to play the markets. Ratio spreads, yep. Ratio spreads. I use a lot of ratio spreads in my project options edge. That is one of my favorite strategies, actually. Especially if I'm willing to own the underlying. As a ratio spread to me is is better than owning a put, or I'm sorry, just selling a put. Sell puts are fine. That's like very basic stuff. Buffett does it. I want to own shares at a certain price. I get it. A ratio spread is I'm willing to sacrifice a little bit of that premium up front, but I give myself a better buffer and I lower my overall delta exposure, which I'm a big fan of that. Like trying to trade with a long bias, but also have like a very low delta. That also helps mitigate some of the drawdowns too. So, all right, we can talk about that stuff. Covered calls, absolutely. Covered calls, cool. Okay, I'll throw in collar trades. I use that a lot for protection. Covered calls to protect and lower your cost basis. Collar trades to have some downside protection for free. I do collars in their finance. Typically, I don't like to do collars for debits. Okay. All right. We'll keep this list. We can evolve this more tomorrow morning. I don't have. Let's see here. Doesn't have any options backgrounds. Uh. Okay. All right. So we'll put a pin in that list right now. I'll wrap up here. So I'm going to keep monitoring the price for the day. Here is real time gamma. We have 67.10. The fill trades today. 67.10 is my call side. So this gamma is at 6,700. 10 is, I mean, it's gettable. I would hope that it's not if the VIX is retreating today, which it is. The VIX had a high around 22.6. Let me put that in here. 22.6. Was it 6.5? 22 point. Let's get the exact number. 22.69. So 1.42. I'm going to use that because we're going to start from this gap higher and go 1.42. And that potential pin price would be around 67.34. Okay, 67.34, 67.35, which means this butterfly, if it's filled, should still be very profitable. This one I might. Let me see if I can make an adjustment to this one. Let me cancel this trade. So I have my broken wing here. So that's a buy, sell, buy. And then I have I doubled that up with a 55, 60, and 70, right? Yep. Okay. So can I sprinkle in? Let's see. I need to get these correct. So I can go 30, 35, and 50. That takes in a little bit more risk. I'll go 25, 35 for $1,000 profit trap. Yeah, that's a little bit. This one, again, this may not fill, but that puts my break even around 36 with $1,000 profit trap. I'm going to try to get this one filled for, yeah, this is fine. Let me make sure I'm not overlapping here. So if I were to buy the 25, sell the 35 with 2, and then skip to 50. So that's 10 wide, 15 wide. This one for $1 would actually be a good trade. Okay. So I got some broke wings at the top. And that way, if my daily profit play is threatened today, I have some defense trades that have profit traps. They also give me another, potentially $100 to $300 of credit. A profit trap would be awesome. This one, I don't think we'll get to that profit trap. This one, we would be right at the profit trap, and this one would be, probably not going to get there either. So if we get filled on any of these trades, these are high probability winners, and then also one that's kind of right in the potential profit trap zone. Okay. So I'll take a screenshot of that and post that for those are going to be like defense trades if you want that on the upside. Otherwise, don't be surprised if the day itself is just going to, maybe slowly drift up here towards 67. And if it just hangs out there for the day, that's great. If it drifts to 67 and falls back down, that's even better. I'm looking for, a decent chunk of profit on daily profit play this morning, which right now daily profit play is break even. So, I mean, delta wise, my call side is trading for a 17 delta. I mean, again, we should have a 83% chance this trade finishes out of the money. That delta shifted to 19. So, I mean, this might get close to 67. This might be threatened a little bit, but hopefully, not enough to stop us out for a loss. So, okay. I'll wrap it up there. Keep an eye on Telegram. I've got class for waterfall income at the 11:30 a.m. We start usually Monday session. Okay. All right, I'll let you go there. And then keep I don't know, keep a strategy list ready for tomorrow too. I'll ask the same question and let's see if there's anything else you want to cover. Again, and we'll start this kind of anatomy of the trade segment on Tuesday, 1:30 p.m. And we'll kind of do like a rapid fire. Let's just go through the strategies. I'll build something out. What we will do on all of these is let's just identify what they are. If it's a strategy that is, you got to be bullish on the strategy, you got to be bearish on the strategy, can it be directly neutral on the strategy? And then we'll put it in. We'll kind of, it's easy to treat everything like, well, let's just do SPY, or we can do a stock trade like an Nvidia or Tesla or something like that. But point is, do you have a plan? Do you have a plan to be bullish or bearish or somewhat neutral? And if so, we can put option trades around that to generate some good trades. So this will be Tuesday, Wednesday, 1:30 p.m. Eastern time. Okay. And we'll just rattle off a bunch of strategies. And again, you can have the recording. I'll put it on my YouTube channel. We'll record it. You can watch it as many times as you want. If you want me to refine things, you can, always ask. Cool. All right. So 11:30 a.m. I'll see you in just under an hour for waterfall income, and come back and see how everything's going for daily profit play. I'll keep an eye on things, set some chart alarms, and more to come. All right. See you later. Bye.
All right, folks, that wraps it up for today. We'll see you guys back tomorrow morning again for another episode of the Daily Profit Plan. So, yep, Gamble with Kane at 2 p.m. I'll be hosting that. So, we will see you guys then. Have a good one.